And in the UK, members of Parliament will today begin a three-day debate in which opponents of PM Boris Johnson's exit plan will attempt to pass amendments on customs, a confirmatory second referendum, and the prevention of a no-deal exit. Well, let's bring in Juliana Olanka now, my colleague in London, for update on that. Hello, Juliana. Good afternoon. So bring us up to speed with the Brexit vote.
Good afternoon, Chimeze. Well, the watchword of the day is caution. Caution for Prime Minister Boris Johnson as he tries yet again to secure his mandate of delivering an EU exit before the 31st of October. He has 9 days. And as you said, today, again, is another crucial day in Parliament. There are two major votes, one being the second reading in principle, which is where MPs for the first time will debate over legislation within the withdrawal agreement bill. Last night, lawmakers were giving this withdrawal agreement bill, which is over 100 pages. Opposition parties have been complaining that there's just barely enough time. But this bill basically will flesh out all of the legislation which will help MPs implement and ratify the deal if indeed they agree. They agree with that. So that will be taking place at 7 p.m. But the more crucial vote is the timetable. Now, 3 days is what Boris Johnson wants parliamentarians to use to debate this bill. Now, typically, even though we haven't seen a bill like this before, there are some suggestions that this kind of agreement would take at least 7 or 8 weeks. But he's asking, his common lawmakers to do it within 3 days. So he is expected to fail that. A lot of people have said that they will pass the first bill, but the Second Amendment at 7:30 is not likely to go through. And if it doesn't, then, of course, this messy Brexit that we've been discussing for months keeps rolling on, and it will look increasingly unlikely that the October the 31st exit date will indeed take place.
Okay, we saw sterling up ahead of the vote. How is it behaving at the moment, as well as the equities?
Well, yeah, yesterday was a great day for sterling. It was up on a 5-month high, trading about that $1.30 mark. Let's look specifically at the numbers at the moment. We'll start with the equities, shall we? The FTSE All-Share is up 0.31%. The FTSE 100 also up at 0.26%. And the FTSE 250 is down slightly at 0.03%. In currencies, the British pound is down on the US dollar by a nudge at 0.05%. Still quite high, though. It's also up on the euro by 0.03% and down on the Japanese yen by 0.06%.
Well, another news out there, Thomas Cook, auditors are facing MPs over collapse. How is that playing out?
Well, it's ongoing. The parliamentary inquiry into Britain's biggest corporate collapse continues. It started last week, and they're really focusing on the pay packets, the big pay packets of their chief execs and auditing. So today, is seeing PricewaterhouseCoopers face a grilling. Now, PwC, they were the auditors for Thomas Cook between 2001 and 2016. And during that time, they oversaw not just what was going on externally, but also they advised on just how much they were supposed to be giving their execs. There was one of their chief execs who received a £5 million cash bonus under their tenure. As soon as they finished, Ernst & Young took over. So really, MPs are asking just how they were able to oversee all of the faults and the loopholes they had with their cash flows and still award these big pay packets. Now, of course, Thomas Cook left hundreds of thousands of passengers delayed when they collapsed last month. And of course, as well, it cost the government over £500 million. So it's unlikely that they're going to be able to get this cash back from their chief execs. But there are still some really tough questions that not just the auditors, but the chief execs will have to face over the next coming days.
All right, well, Juliana, is all about Brexit, and according to you, is caution for Boris Johnson. We'll wait and see how cautious he can be. Thank you. All right, in Asia Pacific markets, of course, that market rose today, likely fueled by an improvement in investor sentiment around ongoing negotiations between the United States and China. Australia's benchmark ASX 200 was up 0.3% at 6,672.20. And of course, in South Korea, the Kospi index rose 1.16%. Chinese mainland shares mostly advanced. The Shanghai Composite was up 0.5%, while the Shenzhen Composite added 1.01%. Japanese markets are closed for a public holiday. In the U.S., stock index futures turned slightly lower today at around 5:30 a.m. Eastern Time. Dow futures dipped 22 points, indicating a negative open of more than 8 points. Futures on the S&P and Nasdaq were both slightly lower. Market focus is largely attuned to global trade developments after China's vice foreign minister said that Beijing and Washington had achieved some progress in their trade talks. On the data front, the Philadelphia Fed non-manufacturing index for October will be released at around 8:30 a.m. Eastern Time. In corporate news, Biogen, Lockheed Martin and McDonald's are among some of the major companies set to report earnings before the opening bell. And to the global oil market, prices edged lower earlier today as lingering worries over a global economic slowdown that could hurt demand offset some signs of progress in U.S.-China trade talks. Brent crude oil futures were down 0.2% at $58.86 a barrel, while U.S. West Texas Intermediate crude futures were also down 0.2% at $53.19 per barrel. Brent has fallen 22% from its April peak, while WTI is down 20%. And to the precious metals market, gold edged higher in early trade today ahead of a crucial vote by British lawmakers on the Brexit withdrawal agreement. But buoyant Asian shares on progress in U.S.-China trade talks limited gains. Spot gold inched 0.2% higher to $1,487.20 per ounce, while U.S. gold futures also gained 0.2% to $1,490.30. Among other precious metals, silver rose 0.3% to $17.61 an ounce, extending gains for a fifth straight session. Platinum dipped 0.1% to $887.11, and palladium gained 0.3% to $1,763.05 an ounce. We'll take a short break, and of course, when we come back, we'll look at other stories and, of course, our domestic commodities market update. Just stay with us.